Hi everyone, it's RC Peck, the founder of Fearless Wealth and the creator of the Fearless Wealth portfolio. And my market situation report this week is about America's most loved stock. And what I want to do is take a specific look at it. And I want to talk about one of the most mean reverting things in the world is profit margin. So if one company comes out and they're absolutely killing it in their profit margin, they have these big, fat, juicy profit margins, other companies are going to figure out that there's a profit in that niche, in that sector. It may take them a while, but one thing that has held true over the last couple centuries, if there's profit to be made by one company, other companies will come into it. So what I want to do this week is talk about two things specifically. One, how we can take advantage of looking at this mean reversion specifically of profit margin, and also where there's a potential buying opportunity. So the stock that I want to talk about, everyone's favorite stock, is the stock of Apple. And I'm going to talk about why I think Apple's a buy at $425. Now, those of you who have not been following me for a while, I've had a buy of $425 probably for about 5 or 6 months. And I've just been waiting for it to happen. Now, maybe it never would have happened, but the probability of it coming back was pretty high, and I'll show to you why I came up with that number and why I think it's a high probability that it will hit that. And I have had that same point of view for the last 5 or 6 months. So when a company has huge profit margins, other companies are going to figure it out. And like I said, there's two things I want to talk about when looking at Apple. One is just looking at what it's done over the last 5 or 6 months. And here on the screen, you see a price chart of RIM. Remember that company that makes the BlackBerry? Well, over the last 5 or 6 months, RIM is up about 156%, while over the same time period, Apple is down 25%. Even if it takes companies a while and they keep tripping over themselves and keep making things that customers don't want, eventually they're going to figure it out. The idea of companies dying and the demise of companies is way, way over publicized. And here's an example of RIM going up almost 160%, while Apple has gone down at the same time period 25%. Then look at this. Remember Nokia? Remember that company that used to make phones? Well, let's see, since July, so it's at about 6 months, they're up about 142%, while over the same time period, Apple's down about 25%. Again, the blue line on the screen is Apple, and Nokia is the red line on the screen. So companies are starting to figure out how to make a profit. They're starting to figure out how to take away part of Apple's smartphone business, which has been, up to this point, a very profitable business. And then look at HP. Now, HP, perhaps the worst run company over the last few years, I think they may finally start to get their act together. Let's look at this. Over the last 2 months, or say 2.5 months, HP is up about 22%. That's the red line on the screen. And Apple, during the same time period, is down about 25%. So even a old, poorly run company like HP can possibly start to figure out how to sell computers a little bit better, and they'll be eating and biting at the heels of Apple. There's a lot of smart, intelligent people out there who want to figure out how to take that nice, juicy profit margin away from Apple, and it's happening, and it has started. Then you've got this other dead company called Dell. Dell's up about 40% over the last 3 months, and during the same time period, Apple's down about 27% during that same time period. Dell may actually figure out how to make products that people like, take some of that profit margin away from Apple. And then we have Samsung. Samsung, it's not the easiest company to get a price chart of. The blue or thicker line of the two lines on the screen is Samsung, and Samsung's up about 17% since August. Now, I have to say, Samsung makes everything: washer and dryers, TVs, cameras, video cameras, smartphones, and I think a lot of this move up, this 16, 17% move up for Samsung, actually has a lot to do with their Galaxy phone. And during the same time period, exact same time period, Apple, which is kind of the darker, now that I look at it closer up, I guess it's more of a purpley line, but it's the one that's falling, is down about 22% over the same time period. And the thing I want to point out about Samsung, Samsung is about a $200 billion company. So for that company to go up 16, 17% is not a trivial thing. So people are taking and biting and getting rid of the profit margin that Apple has had for so long. And I will say Apple will never have the profit margin that it did even just 3 months ago. That is gone forever. Other companies are figuring it out finally, and the profit margin on Apple products will continue to go down. So profit margin is one of the most mean reverting ratios in the world. Now, that doesn't mean Apple's dead. By no means. It's not going the way of Sony, at least not yet. But what I want to show you here is a price chart of Apple, and this is going back 10 years. So on the lower left part of the screen, that's 2003, and the upper right, that is the beginning of 2013. And look at that trend line. My nice pink line there is the trend line, and we are almost at that. And what I want to do is zoom in here a little bit. If you look at this price chart, this is still Apple, but it's only a 15-month price chart of Apple. And look at the diagonal line coming in from the bottom. That's the same one you saw in the previous chart. And then look at the horizontal line that's about at 425. And the reason I had Apple at a buy at 425 is because there was major resistance for Apple in 2011 at the 425. And finally, when it broke through it just took off and went from 425 almost right up to $700. And since then, since it hit $700 in September, it's been falling. And it's been falling pretty hard. I think the first major support we're going to see at Apple is around the 425, and I think that is a very high probable place of buying Apple. As of right now, Apple's down about 35%. For a stock that's was up 100% over a year, dropping 35% is not that big a deal. Plus, it is still in its long upward trend. So the buy for Apple's at 425. It is accelerated with its huge drop this week in just a one-day drop of almost 12% on Thursday. That's actually the last price point you see on this price chart. So what I want you to take away or hear is mean reversion. Things revert back to their mean, especially profit margin, or what people are willing to pay for $1 of profit. That's been going on for 12 years now. But Apple is going to be a buy in about it's about $30 more fall, which isn't that much. It's going to go on my buy list, and we'll be looking for an entry. I got my monthly strategy gathering coming up on February 12th. It's going to be online. Of course, I'm going to go over stocks, bonds, commodities, currencies, real estate. Real estate has bottomed. Currencies, both printable and non-printable, we're going to look at. We're going to talk about how commodities are doing under this new all central banks of the world printing big time. Of course, we'll have speed investing where I deconstruct any ticker symbol you want in 30 seconds or less. And you will be able to personally ask me questions about any individual stock or what's going on with your own portfolio. That interaction is key to growing your money and protecting your money. I'm so glad you're here. I'm so glad you're part of this week's Market Situation Report, and I look forward to speaking with you next week. All right, you take care, and I'll speak to you then.